Everyone keeps saying money market fund is safe. It's the best place to put your money. But let me be honest with you. Not everyone should invest in money market fund. Yes, it's stable, I accept. It's safe, I accept. But there are situations where it might slow down your financial growth. So today I'm going to talk about who should not invest in money market fund. So don't invest in money market fund if you fall into any of those category I'm going to be mentioning. And at the end of the video, you will know if you should invest in money market fund or you should not invest in money market fund, or the ratio. Maybe you should invest partly in money market fund and partly in other financial instruments. So without much ado, let's dive into it. Before we dive into who should not invest in money market fund, let's take a quick recap of what money market fund is. So money market fund is a short-term financial instrument that has its investments in bonds, treasury bills, commercial papers, in short, fixed income, different types of low-risk financial instruments. So money market fund is not a high-risk financial instrument at all. It's a low-risk financial instrument. So if you know that you can accommodate a risk on your investment, then money market fund is for you. But you know, for the purpose of this video, I'm going to be talking about those who should not invest in money market fund or who should not invest solely in money market fund. Also, before I continue with who should not invest in money market fund, let me also say quickly a bit of those who should invest in money market fund, so that you know the category you find yourself. Either you should invest or you should not invest. But if I don't tell you the difference, you might not know if you should actually go for it or you should not go for it. So like I said earlier, that money market fund is safe. It's for those that have low risk tolerance. That means those that cannot manage a high level of risk. It's for those that want safety. It's for capital preservation. That means that no matter what you put in money market fund, you cannot lose your capital. And in fact, you can't even lose your interest. So both your capital and your interest is guaranteed. Unlike other forms of investment like stocks, like equity funds, like cryptocurrency, you can actually lose both your interest and your capital. Not so with money market fund. So let me quickly tell us the difference, so that by the time you are making a decision if you should invest in money market fund or you should not invest in money market fund, you will know the basis on which to make that decision. Another thing with money market fund is also that you can withdraw anytime. Now, like let's say stocks, for instance, you can also withdraw anytime with stocks, but the disadvantage with that is that if you are in a loss position at the moment and you sell off your stock, it means that you'll be selling at loss. But with money market fund, there's no how you will sell at loss, except you choose to withdraw your funds before the time of redemption, which is usually between 14 to 30 days, depending on the platform that you choose to use. But the trade-off with money market fund is that money market fund is a low-risk financial instrument, which means that it also gives you low return. So you can't eat your cake and have it. Low risk comes with low return, high risk comes with high returns. So money market funds fall into that category of a low risk financial instrument with low return. However, the interest rate is still reasonable enough for beginners, for those who don't know where to start, or for those who have been keeping their funds in the savings account, or for those who need a level of return just for their funds not to be totally eaten up by inflation. It's also perfect for emergency funds. But like I said, this video is for those who should not invest in money market fund. So let's get into that. So the very first one I'm going to be talking about is, if you're an aggressive investor, don't invest in money market funds. If you know that you are keen about high risk and high return, the money market fund might not be for you. Or if you know that you know another instrument that can earn you more income or more interest than money market fund, then this money market fund might not be for you. Money market fund is for conservative investors and not for aggressive investors. So if you're an aggressive investor, you don't fall into this category. Another one is high risk tolerance. So by high risk tolerance, I mean that then if you can manage a risk on your investments, you might want to go for an alternative investment like stocks, because stocks actually make you more money, or equity funds is actually going to give you more return than money market fund. For instance, this year, money market fund has been fluctuating between 21% and at the moment is about 17%. Not so with equity fund. Equity fund has returned over 40% this year. But the matter is, the same way it has returned 40%, it could return below 17% and it could even eat up into your capital. So if you know that you can tolerate the risk on instruments like stocks, and equity, then you might go for a higher risk, higher reward investment. Because even if you have a low return at the moment, on the long run, it's still going to give you a good return. So if you know that you can manage the risk on investment, then money market fund might not be for you. Another one is if you prioritize growth over safety. Just like I said with this first point and the second point, if your priority is growth and not safety, then money market fund might not be for you. Money market fund is not going to multiply your income. What it's going to do is preserve your capital and give you interest. Like I said earlier, that the interest currently now is just about 17% per annum, which to me is still a good return if you have a low risk appetite. However, if you have a high risk appetite, like I said earlier, if you're aggressive, if you can tolerate risk, if you prefer growth over safety, then money market fund might not be for you. But just hold on. Even if you still want to invest in money market fund, I'm going to show you how to invest in money market fund, even if you're an aggressive investor, even if you can tolerate risk, even if you prefer growth over safety. I'm going to show you how you will use money market fund to your advantage. So just hold on, you want to stick with me to the end of the video. And by the way, if it's your first time of coming across my channel, you want to subscribe, hit the notification bell because you have a lot to learn from me. Here, what we do is we practice and we say it as it is. No gatekeeping, just investing the right way. Alright, let's continue. Another one is if you're young. Now, if you're young, money market fund is not solely for you. Now, note the word I didn't say is not for you, but it's not solely for you. Why did I say so? When you're young, what you want to do is grow your money. It is when you're getting old that you begin to think of capital preservation. So if you're retiring now or you're close to retirement, I would say invest well in money market fund because capital preservation is key for you. But when you are young, you prioritize growth over safety because that is the time you have to build. But when you are close to retirement or you are retired, growth is not necessarily your priority. Preservation of what you have made over the years now become your priority over that growth because you can't afford to lose everything you have worked for in your active years. But if you are young, if you make any mistake, even if you go into any aggressive form of investments, you still have time to recover. That's why your entire portfolio, that's 100%, should not be in money market fund because there's nothing for you to preserve here. What you want to do is, this is the time you can grow. So grow. Don't put all your funds in money market fund. And if you don't know how to start, like I said earlier, just click on the subscribe button, hit the notification bell. If you continue to watch my video, I can tell you that you will grow and your portfolio will thank you. Your future self will thank you for it. So that's just what you need to do. And if you have any question, just drop the question in the comment section. I respond to every question as much as I can. So let's continue. Another thing is, if you want your investment to hedge against inflation, money market fund cannot hedge against inflation. The current inflation rate is about 18.1% now, and money market fund is 17%. But I tell you, 17% to 18.1% is still fantastic. Only that if you know that you want anything above 18.1%, the money market fund is not for you. However, there's a way we do this thing, and at the end of the day, we are still able to use it to hedge against inflation. I've made another video on that, so all you need to do is just go to the YouTube channel, watch those videos, you will know what to do right away. Another one is if you're a long-term investor. While money market fund will actually reward you on the long run, at the same time, it might not be the best investment for a long-term investment because you still have other instruments like stocks, like equity fund, like ethical fund. We have other financial instruments that can make you much more than money market fund. So if you're looking at long-term or even medium-term, anything above 3 years, then you can think of other form of investment. But if you are looking at 0 to 3 years, then you want to think of money market fund. So now, I said earlier that I was going to teach you how to make use of money market fund to your advantage, even if you're aggressive, you love growth, you have high risk tolerance, even if you're young. Now, I believe everyone should have money market fund in their portfolio. The only thing is that you need to know the fraction you will have in your portfolio. You can't have 100% money market fund when you are just 20 years, or when you are 30 years, or when you are 40 years. That will not be appropriate. If you are in these tender ages, 20, 30, 40s, then it's not time to load up on money market fund. While you should have money market fund, don't load up on it. You can have 20% of your entire portfolio as money market fund. So while you are growing your investments with other high risk investments, high risk, high return investments, you are balancing or preserving 20%. Another thing is, this your 20% can now serve as your go-to money. It can serve as your emergency fund. It can serve as your opportunity fund. It can serve as the fund you quickly need to withdraw because it's liquid. Money market fund is liquid. And by liquid, I mean that it's easily accessible. You can draw your money out as easy as you can draw your money from your savings account. Well, maybe not as easy as your savings account, but you can draw it fast. If you redeem your money, you can get it within 24 hours. So instead of leaving your money idle in savings accounts, if you have idle funds, put it in money market fund and let it continue to generate daily interest. Money market fund generates daily interest. So at the end of this video, let me know which category do you fall into. Will you invest in money market fund, or you will not invest in money market fund? And if you will invest in money market fund, I would like to know what percentage will you invest in money market fund. Your age has to do with the percentage you will invest in. So let me know what percentage of your entire portfolio will go into money market fund. And if you have a question, if you don't know which percentage should go into it, just drop it in the comment section and let me see how I can help you out. So share this video so as many people that are going to benefit from this, and I will see you in my next video.